Hello traders, the title of the video is Stock Trader Analyzes a Stock. Should investors be worried that McDonald's just ousted three top executives? Alright, let's get started. I'm on the quarterly chart of McDonald Corporation, and we're going to analyze McDonald's stock in the light of the article from Motley Fool, www.fool.com. Alright, that's the website, www.fool.com. The title of the article is Should Investors Be Worried That McDonald Just Ousted Three Top Executives? Alright, the article is written by Rich Dupree. I hope I'm pronouncing the name correctly. Alright, Rich Dupree. Alright. So the article is in this article we can read that as the McDonald comeback stalls because they were doing a lot of hard work to improve okay, the cash flow. Alright. So now they say that the comeback has stalled. So something is not working. So it was working before, and suddenly that comeback is stalling. It's not giving the same result as before. Now the question is, should investors be worried now that McDonald has just ousted three top executives that were part of that okay, comeback? All right. So you may say to me, George, I don't trade McDonald, alright? I do not trade American stock. Why should I watch this video? You should watch this video if you are a stock trader. You are a technical trader. You are an investor in a financial market. And most importantly, if you trade McDonald, alright, you should watch the full length of this tutorial. And I want to show you, okay, few tips and tricks that you can use as a stock trader or an investor, alright? As the McDonald's comeback store, the fast food chain just overhauled its management team, ousting three executives in a shake-up that suggests that CEO Steve Easterbrook's initiative to transform the chain into modern, progressive burger company aren't moving as fast as well as expected. All right, so there are a bit of okay, so problem there, so they try to fix it, and one of okay, the action being taken is to remove okay, three top executives as a new faces come to in to oversee marketing, money, digital technology. Investors should worry that McDonald will see the giant, okay, it will see the gain, sorry, will see the gains it already made evaporates. Alright, so comeback is stalling. Alright, last week McDonald booted its chief marketing officer, alright, CMO. She had been critical in promoting the rollout of all-day breakfast last year, which was credited with launching the turnaround that saw the restaurant chain post higher comparable sales, alright, in 2015 for the first time in 3 years. Now you have to understand that the Burger King was posting consistently okay, higher results in comparison to McDonald's. So if you understand McDonald's and okay, Burger King, they are competitors, alright? But last quarter, okay, comps fell again, or the result fell again, suggesting there were limits to how enduring the all-day breakfast menu could really be in luring okay, customers back. Okay, the chief marketing officer will be replaced by executive at PepsiCo, though Coca-Cola has been the burger, the McDonald's joint exclusive drink partner for decades. All gone are the vice presidents of the US menu and digital technology. So marketing officer is gone, alright, and also the vice presidents of the US menu and digital technology. All three areas has been cited by McDonald as key component of its transformation as it pledged to update and upgrade all 14,000 or so US restaurants with a new self-service kiosk, mobile ordering, and uh, payment smart menu board to recommend food choices based on the weather, okay, home delivery, and even table service. All right. So the point of this article is just to show how there is a program in place to transform McDonald's into modern fast food company, and that program has been working before, but recently it did not work. It's stalling. So therefore, they have removed three top executives, and the question is, should the investor be worried because of those changes? The top executive that were part of that transformation that has started, now they remove them because usually investors, remember this, so you know this is one key point you should retain from this tutorial, is that investors follow managers and directors. Sometimes, because a manager is gone, all right, some investor will lose their trust in the company, so they may divest in that company just because that director or that CEO is no more part of that business. On the other hand, sometimes a business or a company may not be doing so well, but as soon as a director or a CEO, a new CEO is appointed, investors that are following that or a big financial institution that trusted that new director will quickly come back and invest in that company that was not doing well before. So as a stock trader, you have to understand what's going on. Just directors or CEO being removed is a big issue for a company. That's why very often they don't say that they sack the CEO. They say they left for health reason, they left for family reason, they left to try new things, or they take early retirement. And so, because if they say that they sack the director, some investor will quickly close their position straight away, because if they put their trust in that director and that director is sacked, that will force them to divest in that company. So this is one thing you need to understand if you are in the stock market or in the financial market. So you have to understand that McDonald's and Burger King, there's a big competition going on, and here we are. Burger King is posting encouraging financial result year by year. All right. Wendy's, which is another competitor to McDonald's, also doing the same thing. So McDonald's noticed that they have to bring in some changes because they are not consistent with their results. So that transformation was working, now has stopped working again. So they have to remove some of the top executives and bring in new directors, new CEO, to push the transformation forward to make it work. All right. So the question is, George, you may be asking now and say, George, you are a technical trader and now you are talking blah 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 blah, and we want to know more about the technical analysis. That's a very good point. Here we are. We're going to look at it now from the technical point of view. The first thing that you need to do. So they say, all right, should the investor be worried? All right. So first thing first, I'm on a quarterly chart. If I draw on this chart, the reason why I'm using quarterly chart is because position traders use quarterly chart. Those are the big financial institutions, the hedge funds. Their favorite time frame for the trading setup is the quarterly chart. All right. So as those hedge fund and big financial institutions that are using the quarterly chart are looking at the quarterly chart of McDonald's, what are they looking at? What can they see? Is the chart exhibiting a bearish indication? Right? No, it's not. Why? Because the price was in this bullish channel, and now it breaks above that bullish channel. It's not bearish, it's bullish. So technically speaking, investors should not worry. But don't go away just because I said that now that you should not worry, all right? Because there are more things that we need to take into consideration. All right? There are more things we need to take into consideration here. So That's the first sign, all right? It breaks above that rising channel and retests in a final support. Not only that, it's going up a bit, but there is a key level that I want to give to technical traders and also to investors, okay? I want you to put on your chart, okay, Fibonacci, okay, extension for the last price move. Okay, the last price move in this case is from this low here to this high here. All right, you see now. So that's the last bullish price move that breaks above this consolidation here. I need to remind traders that are following us at 24 Elliott Waves YouTube channel that I will be performing an Elliott Wave analysis for McDonald's stock, and I'll post that video at the 24 Elliott Waves YouTube channel. So stay tuned. So for technical traders and investors, there is a price target that one you need to watch is right here for McDonald's. $142.70. I'm going to color it now into red. Okay. So because it breaks a ball, okay, that bullish channel. If the bullish, repeat, if the bullish momentum continue, the price target that one should look up to is at $142.70. It's exactly that 138%, not 138.2, but 138% Fibonacci extension level of this price action here. Very important resistance level. So if it reaches that level, all right, know that it's a resistance level. The price may find a resistance there and come down. Okay. The next thing that I will show traders is this level here, the level of 152. I'll color that one into pink to place the female lady that can trade better than men. All right, here we are. This is the 152. That is corresponding to the 161.8% Fibonacci extension of this price action. So resistance at 142.70. That's the medium term target if the bullish momentum continues. All right. And if it breaks above 142, there is another resistance at 152. What I want to add is this: if McDonald at one point breaks above that 152 and finds support, it will continue to go up more. Personally, I would say to investors, should I say that? Personally, in my opinion, all right, I'm not saying anything to investors. In my opinion, this stock has more upside, okay, to go. Personally, that's my opinion, okay? So you do not have to believe my opinion, and this is not financial advice either. This video is for educational purposes only, all right? Okay. So 142.70 first medium-term target. If the bullish momentum continues, it breaks above that resistance. Watch out for the 152. The stock will continue more if it finds support above the 152 level. Looking at the chart right now and the channel on this chart, we will use the market geometry by measuring the width of this channel, and then we'll project it to the upside to draw a line to this point, and that line should be parallel to our first channel. This is about market geometry. If you want to know more about market geometry, check the playlist about market geometry at dayprotraders.com. So what I'm going to do, I'm going to color the first channel into red, and now I have projected that channel in the direction of the price using market geometry. All right, so but I want to highlight the first channel that we were looking at is the red channel here. Now you can see that the price is now on the edge of the median line of the second channel, the projected channel. We are near the median line. So for those who are day trading and swing trading, you need to allow the price to break above that median line, something like that, okay, to retest it, form a higher low in that vicinity, or form a bullish chart pattern in the vicinity of that median line before we can take it up to 142, the first medium time target. I'm going to call out the median line of the projected channel into green. All right, green. All right, that's the green line there. So the price now near that green line. If I go quickly, you may say, George, I'm a day trader, and why are you on a quarterly chart? Go to the go to the 4-hour time frame, and you can see here. On a 4-hour time frame, there is a resistance here on the 4-hour time frame. Here it is. You see this resistance on the 4-hour time frame. The price is now approaching that resistance on the 4-hour time frame. That's where we are now today. Okay. That's where we are now. There's a resistance on the 4-hour time frame. So there was this resistance before. The price form, in fact, here on the 4-hour time frame. The head and shoulder chart pattern. This is the head, this is the left hand side shoulder, this is the right hand side shoulder, and from there it came down. So there was a bearish chart pattern on the 4-hour time frame near the resistance of 13175. This is for day traders. So today, as you can see, as the market opened, the price went near that resistance and it's now trying to come down. So be aware of that resistance. But the point I want to make to you here is that that's the media line of the projected channel that we have drawn on the quarterly chart. That's the green line here. And also there's a resistance there. So as a day trader, you want to navigate through those resistance carefully on the 4-hour time frame, looking for trading setup in the vicinity of that trend line, before one can be bullish. So talking to day traders, priority to bearish signal below 13175 and priority to bullish signal above 13175. Right, you see here, principle retested around, final resistance, start displaying lower lows, lower high, on the edge of a bearish trend line. But right now, watch out, this trend line also is still supporting the price on the 4-hour time frame. Alright, so it's still supporting it, but I will be talking to earlier wave traders about McDonald because of what we see on the what we see in the 4th area wave. I'll be talking about it. This stock has more upside because the 4th area wave is a triangle. There is a possibility, there's a high probability that McDonald will continue to go up. But a word of warning to all traders and investors. Now, sometimes when we are talking like this, traders take it as definitely this is what's going to happen. Now, this video is for educational purposes. Now, we are talking about area wave, and market forecast is not guaranteed that the price will do exactly what we are expecting. But talking about probability, there is a high chance that it will continue to go up. But there's one warning I want to give traders is this. Now we are looking at the McDonald's stock. This is what I'm saying to traders, that you do not have to trade McDonald's before you can watch this video. You do not have to trade American stock before you can watch this video, because it's firstly about stock trading, alright, and technical analysis, alright. Now, though it is a mistake for traders and investors to analyze a stock on its own. So we are talking about McDonald's stock, alright? But if you stop only analyzing McDonald's stock alone, it's a mistake. Why? Because one should first trade the market, which is the S&P 500, and then align your McDonald's technical analysis with the S&P 500, which is the market. So if the S&P 500 is becoming bearish, that will have a negative effect on McDonald's. So we may have a high probability trading setup for McDonald's stock charts. But if the S&P 500 becomes bearish, that may have a negative effect on McDonald's. This is just a warning that the market will influence other financial instruments. This is about the trading triangle, the market first, the sector before the individual financial instrument. The heart of the trading triangle, we have the market leaders, the economy news, and the fundamental. Talking about market leaders, I recommend to traders to go to www.dayprotrader.com and click on Market Watch webpage, alright, and you will see the market leaders for the Dow Jones, because McDonald belongs to the Dow 30, index, alright, Dow 30 index. McDonald belongs to the Dow 30 index, alright. Hold on a second, once I write something down for myself here to remind myself what's going on here. All right, so this is about stock trader analyzing analyzes a stock. Should investor be worried that McDonald has just ousted three top executives. So you know the story now, and the article is written at www.fool fool.com. Alright, it's Motley Fool, okay, generally called Motley Fool. And the title of that article is Should Investors Be Worried That McDonald's Just Ousted Three Top Executives? That article is written by Rich Dupree. Hope I pronounced that name correctly. Alright, so this is what we see, technically speaking, and I will be going a little bit deeper with Elliott wave because this is the fourth Elliott wave right here in this session, and there's a high chance we may have an extended fifth wave, so the prime may be pushing it more. In fact, I will leave that one now. I'll talk about it when we are talking about Elliott waves or for McDonald's stock. So high chance that we may see it 1, 2, 3. Okay, probably pushing it all the way to the edge of the top channel, pull back a bit, and then hitting it one more time, and breaking that okay second target at 15250. But the warning is that if the S&P 500 becomes bearish, that will have a negative effect on McDonald's also. Watch out, because we are talking about the Dow 30 component, which is McDonald's. One should also, so this is about the market leaders, the inside of the trading triangle, the market. So we talk about the triangle, the trading triangle, the market, the sector, the individual financial instrument, then the leaders. So you have to understand what is happening now. All right. So the Dow Jones Index, okay, the Dow Jones Index, all right, is a market indicator for McDonald's. The Dow Jones Index is also a market indicator for all the components of the Dow 30. So the Nasdaq 100 is a market indicator for all the stocks that belong to the Nasdaq 100. So if you are trading, for instance, McDonald's, which belong to the Dow 30, you must also pay attention to the Dow Jones Index because it's reflecting that group to which McDonald's belongs to. So apart from the sector, you will also look at the index to which that that stock belongs to. So do you think that this is not all about McDonald's or American stock? It's more about trading stock, technical analysis, tips and tricks for traders and investors that are okay in the financial market. Okay, all right. Hold on a second as I'm writing something down for myself one more time, which I do very often because I need to put things in the description section for the video. As I'm recording the video, I'm taking some note myself, okay, so I do not forget. Okay, all right. So you see now. So one more time, as we apply market geometry, as I'm saying to you, there's a high channel. We may see the price pushing it up into 5 waves: 1, 2, 3, 4, 5 up. Okay, in normal condition, if the S&P 500 breaks above that, because the S&P 500, which represents the market, is now confined in a triangle. If it breaks above that triangle, that's a bullish for the market in general, and the bullish momentum may explode and continue to go up more, and we may see a lot of fifth Elliott wave extension. Not only the fifth Elliott wave extension, but the fifth Manon wave extension of the fifth wave itself. Alright. If you don't understand what I just said, it means that you need to subscribe to 24 Elliott Wave YouTube channel. Okay. So if the price McDonald's stock goes above the second channel that we have projected, using market geometry, we will project that channel one more time. Alright. So and then we draw another line. It's a powerful tool, the market geometry. Talking about it at Day Pro Trader YouTube channel. Alright, so here it is, we project the channel. So there is a possibility if they continue to push it more and more, alright, that McDonald's may go above, okay, the second channel, alright, in the zone of 152.00 and watch out for the media line for the third channel. So I'm going to call out the third channel into orange, so you can see on the chart that's the third channel in orange there. Oh, well, no, I'll prefer to use dark green for the third channel. Is it good? Okay. Yeah, that's the dark green for the third channel. I mean, the third channel is the second projected channel, right? Here it is. So you need to draw all these channels on your McDonald chart, alright, so you may know exactly where our resistance level. So probability that McDonald may reach the level of 152, even coming near the median line of the third channel, somewhere, okay, in this zone. Alright, that's a price target. The zone of 159, 152, 159, talking about normal condition, and provided that okay, their transformation is start working now, because investors are looking carefully, all right, so they start something that was working very well, and recently, okay, the last quarter result did not impress the investor. So the question is that should investor be worried that now that they have ousted a three chief executive, all right? Now, so though technically speaking, it looks more bullish for McDonald. Okay, one should be guarded that okay, if their transformation is not producing the result expected, some investor may become a little bit worried. All right. And also, all right, if the S&P 500 becomes bearish, that will also have negative effect on the bullish progression of this stock. So, taking it all together, all right, one should go gently, gently, because the S&P 500 is confined in a triangle. It did not break above that triangle so far. The triangle represents a warning to the financial market that one should pause and wait carefully, okay, because anything is possible. All right. So this is the end of this tutorial about stock trader analyzing a stock. In this case, we were analyzing McDonald's stock, an American stock that belongs to the Dow 30. The question is, should investors be worried that McDonald's has just ousted a three top executive? All right. As always, if you have any question or suggestion, all right, put it in the comment section, and in due course, I will be recording another video to answer your specific question. We are the TSTW24 traders talking about stock trader analyzing a stock. Should investors be worried that McDonald's just ousted three top executives? Happy trading to you all, and speak to you soon.